I'm Charlotte McLeod with investingnews.com, and here today with me is John Ciampaglia, CEO of Sprott Asset Management. Thank you so much for joining me. Great to have you on as usual.
Yeah, nice to be back.
Really good to be speaking, and it is actually quite a good timing, I think, for this discussion because we just recently had the news that the Sprott Physical Uranium Trust's net asset value has gone above $5 billion. So wanted to start there. I thought maybe you could give us some context in terms of what we've seen in terms of growth since the launch of the fund, and perhaps going forward into the future, what could be expected.
Yeah, sure. Yeah, so yesterday we announced that the trust had reached a new milestone in its short life, and that is hitting $5 billion US. Those are real dollars, not Canadian dollars. But it's a pretty significant milestone, and yes, it is largely symbolic, but I think it's a really good reflection of the interest that we've seen globally in the uranium sector. It's really a global area of interest. We talk to investors right around the globe. I wish we could talk to more investors in Canada, to be honest with you, because a lot of investors around the world seem to have figured out this uranium story. And sometimes I feel like Canadians, which, obviously are one of the largest producers of uranium in the world, are still a little bit behind. But nonetheless, it's been an incredible growth trajectory since the vehicle was created back in July of 2021, which was only $630 million, which we inherited from the old Uranium Participation Corporation. And that growth has obviously come from new investor inflows, which has been about $2.2 billion. And then obviously the price of uranium has been very helpful in that growth, where I think the first pounds of uranium that we bought were around $30 a pound. And the price of uranium is kind of flirting with $80 a pound right now. So that's a big move in 2.5 years. But more recently, the price of uranium has gone from, say, $60 at the beginning of September to, as I said, it's flirting with 80 right now. So it's been a pretty punchy move in the last few months. And that's really, I think, driven by, growing recognition that we have a large supply deficit that needs to be addressed in the market, and utilities are buying a lot of uranium right now as they kind of reload inventories.
Yeah, definitely. You mentioned it's symbolic, but people do like those big round numbers. So definitely worth marking that. And in the release about that milestone, you're quoted as saying, the uranium market is still in its early stages. So you started to talk a little bit about that. I wondered if you could characterize the current stage right now and give us an idea of when we start moving on to the next stage and what that might look like.
Yeah, that's a great question. I do think that we've moved in the next phase of this uranium cycle. I mean, historically, when you look at these cycles, they can last, typically 6 to 8 years. I do feel as though we're in kind of year 3 of this cycle. And, it's impossible to know how long it will last, but we think it still has quite a bit of room to grow. And the reason for that is because even at, $80 uranium, it's still, in our opinion, not high enough to stimulate and incentivize the hundreds of millions of pounds of incremental production that the world will have to somehow figure out how to produce over the coming years to meet the expected demand with all of the nuclear capacity that is being planned around the world between now and, say, 2040. So, yes, I would say maybe we're moving into the middle innings of the game, if I want to use the baseball analogy. But we still think we've got quite a few innings to go.
Right. And, you mentioned incentive prices. And when we had prices quite a bit lower than they are today, there is a lot of talk about what it would take to have older mines restart, have new production come back online. So what are those levels actually looking like now that we've progressed?
Yeah, well, the last, I would say, 18 months or so, we've had kind of a flurry of announcements from mining companies signaling that they're going to bring mines back online. And many of these mines have been on care and maintenance since 2018, some of them even earlier. So, in our experience, as we hit kind of $50 and closer to $60, you've definitely seen an acceleration of announcements whereby either this year or next year we're going to be seeing these restarts. That's great. Those are the easy pounds to find because obviously those were previously producing assets. They sometimes need a year or two to bring back online, but those are the easiest pounds. The hard pounds are the new projects, and that's because you need to raise a lot of capital to fund the financing of the construction. Those construction projects are obviously very complex engineering endeavors, and they obviously take many years to come online. But if we don't make the investments soon in those kinds of projects, we are going to have a very serious supply gap based on our analysis and other industry participants around the year 2030, where you start to see existing mines production start to tail off. And that's when you really need new mine production to help fill that gap. So it's a big challenge. I like the story because there is a huge opportunity here for Canada. Obviously, we have very rich deposits in Saskatchewan, and there are some potentially world-class mines being developed there, which is very exciting.
It is definitely very exciting. And, when we talk about the price, I think people have been really excited as well to see the movement that you've described this year. But looking forward to the future, people want to know, what is the trajectory going to look like? Are we going to continue to see this steady upward move? Are we going to see that spike scenario that we've seen in previous times? I won't ask really about timing, but what do you think the trajectory looks like?
Yeah, I know it's interesting. There are two schools of two schools of thought here in terms of, are we going to see this continued, kind of staircase type pattern in terms of the price, inching up towards this incentive pricing, or are we going to see some kind of a spike blow off type of thing? Obviously, we don't advocate for this. You invest with this theory that you're going to have a spike. So, I think it's fair to say that we have been moving in this kind of staircase pattern since 2021. That's a very healthy, gradual rise in the price. Now, having said that, why people anchor onto this spike theory is because it is a very concentrated supply chain. You have one country that produces 45% of the world's uranium. It's like the equivalent of having a single country, like the equivalent power of OPEC. So it is a highly concentrated supply chain. When you add in all the other countries, such as Uzbekistan, and I was referring to Kazakhstan, but when you add in all the other countries like Uzbekistan and China and in Russia, they control a pretty significant size of the overall global production. And then more recently, we've had a coup in Niger, which is another country that produces 4% of the world's uranium. And people, focus on this risk that if there's a disruption in any of those countries, you could have a short-term squeeze or a supply crunch, and that could cause the price to spike. Now, I'm going to caution everybody to say that utilities do not run just-in-time nuclear power stations. They typically have 2 or 3 years of inventory on hand at any given time so that they are insulated against such shocks. So if there is a shock, they don't have to panic like we saw utilities panicking in 2022 when the natural gas price spiked because, supplies from Russia were cut off. So it's a very different dynamic, market dynamic and inventory model. And I actually think it's one of the advantages of nuclear power and uranium specifically. It has such incredible energy density. You can store vast amounts of energy in a very small volume of space.
Just because you mentioned how the supply landscape is quite interesting with Kazakhstan taking up so much of the market, during this cycle for uranium, are we going to see at the country level much change, or will it stay largely the same?
Yeah, I think some of these countries that have these deposits and other commodities for that matter are becoming increasingly strategically important. And I'll just give you a quick example. Just a few weeks ago, the president of France was touring through Kazakhstan, Mongolia, and Uzbekistan. And you might say, well, why is he going to those countries? Well, because he is there to sign different deals and arrangements for uranium. Because France uses a lot of uranium, 70% of their electricity is produced from nuclear energy. and they want to ensure they've got long-term security of supply, because right now, a lot of the uranium that France relies on is from Niger, which is in the middle of this coup situation. So we think that energy commodities are going to become increasingly important. You've also seen the heads of Russia and China make visits recently to Kazakhstan. Again, why? Things like uranium and oil are very strategically important to a supplier that's right next door. So we think that there will be growing demand on countries like Kazakhstan to produce more uranium. A lot of that uranium is eventually going to make its way to China, which clearly has the most aggressive build-out plan of nuclear power in the world, with a planned addition of 150 new nuclear reactors over the next 10 years. So yes, geopolitics is very entangled in uranium, and you clearly see the jockeying amongst world leaders and superpowers to ensure they have security supply from friendly countries.
And perhaps we should also mention, the processing capacity as well, which the war with Ukraine and Russia kind of threw into it, highlighted that when that started happening. So are we making progress there? Are we seeing countries also start to think, okay, we should deal with that as well?
Yeah, I think in the last 3 years, between COVID and then the invasion of Ukraine by Russia, has really acted as a powerful catalyst for people to rethink supply chain resiliency, which is this new jargon that people are using. And it's basically describes where do we rely, like where do we get stuff from? Who do we rely on? Which companies, which countries? And obviously, people are increasingly focused on diversifying their supply chains and de-risking their supply chains. And whether you're talking about uranium or rare earths or lithium or graphite, I mean, there's just so many minerals and different manufacturing capabilities that are heavily, heavily concentrated in many cases in China. And, governments in the West have identified this risk, are trying to de-risk that situation by reshoring, which is another way of saying we're going to build ourselves on local soil, or we're going to friendshore. That's another wonderful term to talk about how countries are working together cooperatively to build alliances, to use free trade agreements to build things, whether they're EVs or solar panels or whatnot. So this reshoring and nearshoring kind of trend is just starting, and it's really a direct response in terms of the war that we saw, the kind of weaponization of certain commodities. We think this is a very parallel situation that happened in the 1970s. You were too young, but I remember when we had oil shocks from OPEC, when they squeezed the oil price through embargoes. The West obviously figured out that they needed to de-risk their exposure to OPEC. What happened as a result of that was we built out a lot of nuclear energy capacity in the 1970s and 1980s. That was a direct function of the industrial policy and energy policy shifting to mitigate against that oil shock from happening again. When you think about what happened in 2022, it wasn't just an oil shock, it was an everything shock. Oil, natural gas, coal, palladium, nickel. Why? Because Russia produces a huge amount of all of those commodities. And the world is obviously trying to figure out how to become less dependent on certain countries that today might be friendly, but tomorrow may not. So it is having a profound impact on capital flows, industrial energy policy. You see Canada just announced $1.5 billion fund to help stimulate the production of critical minerals. Canada is obviously in a very good position right now. Countries like Australia, countries that have very strong mining pedigrees and good mining laws, I think are going to be big beneficiaries as we go forward.
Okay, I think that was a really great overview of what we have going on there. The other thing I want to make sure we talk about is what's going on with the uranium companies right now. So we know with the supply and demand dynamics, I've been hearing for a while now that it's become a seller's market. And I know it's tough to say, exactly all the details of the deals that companies may be starting to do with utilities. But I wonder if there's anything you can say about how these companies are looking to set themselves up as well as they can for this bull market.
Yeah, it's a great question, and obviously, as the commodity prices grown from $30 odd a pound to $80 a pound, you obviously have an opportunity for many of these companies to come back to life. Many of these companies had projects that were either on care and maintenance or development projects that were basically on the sideline for years. Now, with more attractive pricing for the commodity, you have a fighting chance of moving your project forward again. So we've seen that obviously in different layers. Uh, the first layers have obviously been the restarts of mines that have been on care and maintenance. That obviously is a huge lift to those companies in terms of being able to sell uranium again and not having to deal with the costs of keeping those mines on care and maintenance. But it's also permeating down the food chain in terms of some of the smaller cap companies or the near term producers. They're being invited by utilities around the world to participate in different RFPs to supply them with uranium over long term contracts. When those companies get those contracts, it definitely helps underpin their production, or perhaps securing a loan from a bank or another lender to build the mine or expand the mine to meet that future contract. So this is all very healthy. It's part of the sector, I think, recapitalizing itself after going through a brutal bear market, and obviously getting back to work. And I think that's been a real positive for a lot of these companies. The uranium mining stocks had a period where they lagged a little bit against the commodity price. We've noticed since August that there's been a reversal of that trend. We're seeing money come back into the uranium mining ETFs, and we've seen capital, definitely lift a lot of these share prices. So it's a healthy sign. The industry's coming back to life. Profitability is returning. Production is growing, and obviously the commodity price has a lot to do with that whole dynamic.
Yeah, and okay, so you mentioned money coming back into the ETFs. I wonder if you could talk a little bit more about where is that interest coming from? Who is kind of finding this sector and looking at it as a possible opportunity?
Yeah, we've definitely in the last few months with our own products seen a shift of buying interest in a couple of ways. We've seen more generalist investors reach out to us in the last 3 months asking about this sector. Hey, what's going on here? Why is this thing up 50% when everything else is down? We've definitely had numerous inbound calls from institutions around the world. And specifically with our uranium mining ETFs that we offer, we've definitely seen a rotation from more, individual investor interest to more, I'm going to call it advice channel, more advisors, registered investment advisors in the US, family offices, hedge funds. We've definitely seen more institutionalization of capital going into the uranium mining equities, which is a really healthy sign, because it just can't be retail investors kind of, helping the sector come back to life. We need to get institutional money in the sector. As the sector recapitalizes, that clearly, begets more liquidity in trading, because it allows institutions to get invested and positioned in these companies. And historically, it's been hard for institutions to get involved in some of these companies because they're just too small for them at this point. But as these companies get back to production, grow revenue, and their market caps rebound, that definitely opens the door for more institutional ownership, and we're starting to see that.
Okay, I think that's really useful, because for me, sometimes I get a little bit lost in terms of knowing, how mainstream actually is this? There's been some articles in Bloomberg that have popped up that makes me think maybe people are looking at it more. Then again, this past weekend, I was talking to some friends about nuclear power and uranium, and they had some very outdated ideas. And I was like, no, that's not true at all. So I think that helps to put it into context in terms of where we're at right now, in terms of how people see it.
Yeah, I think you summed it up perfectly. Even though there's been growing interest, I would hardly call it a crowded trade. We still have the biggest challenge is larger institutional money still cannot get positioned in the sector because it's just not big enough for them that meet all of their liquidity and risk management parameters. But I would say that in the last couple of years, the nature of the questions that we get have changed a lot. And 2 years ago, a lot of the questions we would get would be simple as, are we sure nuclear power is safe? What about the waste? It'd be very basic things like that. And we'd spend a lot of time helping to educate people about those questions. Now, the nature of the questions are, let's talk about primary production. Let's talk about supply. Let's talk about, nuclear generation capacity that's being built. It's changed very significantly as I think people have a better understanding of energy. Unfortunately, it took an energy crisis in 2022 for people to actually stop and think a little bit about where does energy come from? Where do we buy this stuff from? Where does our gas come from, et cetera? And I think as a result, people are having more informed, educated discussions with us. That's for sure.
Yeah, I say this all the time. I think uranium investors are generally a pretty savvy bunch, but ties into a question that I wanted to ask you, which was, are there any points that you see people maybe disregarding a little bit or missing that you would want to highlight?
I would say there's a couple things. One, it's a very different industry than, say, other commodity sectors that operate with a more just-in-time model. And what I mean specifically by that is utilities have multiple years of inventory on hand. It's easy to store a lot of different elements of the fuel cycle. And so it's not as vulnerable to, say, natural gas when you get these like, cold snaps or warm spells, and the price can go up and down very quickly. Uranium isn't as vulnerable to these kind of short-term movements. I would say the other thing is people's expectations, I think, need to be balanced. Yes, it's an exciting sector. Yes, it's coming back to life, and there's interest and a renewed level of commitment by governments for nuclear energy. But it's going to take a number of years for the industry to basically get back in equilibrium. It's not going to be an overnight. I always say that legacy problems take years to fix. And if you think about a legacy problem being we had a 10-year bear market, you're not going to fix that in 1 or 2 years. It's going to be multiple years. And that's one of the reasons why we think this cycle is not going to be 3 or 4 years. It's probably going to be 6 to 8 or maybe 10 years. And that's just because there's a very big problem to solve, which is the industry needs to figure out how to double production of uranium over the next, let's say, 20 odd years. It's a very big challenge because, as we know, building new mines is very capital intensive with long lead times and lots of kind of bumps along the way. And investors have to be patient. I think their expectations have to be realistic, and obviously it can be volatile, and the worst thing is to get kind of shaken out when we hit a little bit of an air pocket.
Okay, I think that all makes a lot of sense. I think I've got one more question for you, just on the demand side. And, when I'm talking about demand, we know demand is really strong. And the footnote that I hear about a lot is SMRs. And what most people seem to say is, this is a future source of demand. We can't really say anything about it right now with a high degree of certainty. So what I wanted to ask instead is maybe at what point do we start to be able to make a little bit better predictions?
Yeah, it's a great question. So in September, the World Nuclear Association, for the very first time, included some deployment of small modular reactors in its 2040 forecast. So that was the very first time. I would say it's a pretty conservative and modest forecast, but it finally got included. And the reason for that is simple. We're inching towards commercialization. There are clearly numerous companies at different points of this process, meaning, regulatory approval, piloting, commercialization, and obviously, building out to scale. But I think there's enough groundswell interest globally that it is going to happen. Doesn't mean all the companies are going to be successful. There will be winners and losers. Where I live in Ontario, our local power authority has green-lighted, I think, 4 GE Hitachi SMRs to be built. So Canada is going to be one of the first countries in the world to actually build these small modular reactors, which is exciting. But other countries around the world have signaled that they also want to be involved in this technology. Again, there are very different use cases. Some are traditional, let's build this for power generation, electricity, but other designs are focused on things like producing heat for industrial processes. So it's really exciting. So it's about decarbonizing, whether it's decarbonizing the production of electricity or decarbonizing the production of heat for industrial processes, or potentially, other use cases. It's an exciting technology, but again, it's still early. We still have multiple years to go to really, I think, prove the technology and scale it. But these investments are being made, and I think I think it's a very exciting next evolution of the nuclear supply chain.
Okay, thank you for going over that. That's all I have for you today. We can wrap it up unless you had any final thoughts that you would leave investors with in terms of uranium right now.
Yeah, I mean, the only thing I would say is, do your homework, become educated on the sector. Come to our website. We produce a lot of great reports every month on uranium, and we have a number of great podcasts. Learn from our experts. We often bring in outside guests to help people understand this wonderful commodity. So start there, Sprott.com.
Perfect. Well, thank you so much. This was really good to have you on. Hope to do it again soon.
Thank
Okay.
you for having me. It's been great.
Of course, and once again, I'm Charlotte McLeod with investingnews.com, and this is John Ciampaglia with Sprott Asset Management. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.